What's going on, everybody? Welcome back to another episode of Blazing Crypto Profits. Today, what I have for you is a presentation that I've created about trading. And it is information that I have compiled over the past year as I've been introduced to this craft. And, this is also, I'm not going to say like an orientation, but I want you to think of it like an orientation, because every trader, really has their own strategy. You got a lot of traders, they'll knock other traders for their style or for using this or that, but what works for that trader works for that trader. So with that being said, this is my method. This is my strategy that I am currently compiling data on. And I'm also looking for someone who's or multiple people that are willing to join me on this journey here to financial freedom. And of course, we know that we're not going to make $1 million overnight, but the thing here, what I'm presenting to you is to focus on a strategy, and I'm presenting to you some strategies. So at the end of this presentation, or during whatever, you can tell me, you can let me know if you think it's something that could work, or if you want to join, with trading every morning, But anyway, let's just go ahead and get straight into the presentation, and because we got a lot of information to go through, it's gonna be some time, so let's just go ahead and start getting through what it is that I prepared. All right, so this is the beginning. So if you're still here, that means that you're interested in trading. You want to see what's going on. So once you have decided that this is something that you want to do, once your mindset is in a place that it'll put you in the best position to extract the most out of your studies and practice on a daily basis, you must begin to learn about trading, and this presentation is the perfect start. Like Jim Rohn said, getting rich in America is easy. You need 3 things. 1, be in America. 2, find something you like to do. In this case, it may be trading. You never know. You won't know until you try, right? You could be like, oh, this is what I've never been missing. This is what I've always been missing. That's how I felt anyway, and I'm sure it's a lot of other traders that felt that same way. And 3, find a teacher. In this case, if you know me personally, I can be your best teacher for the time being until you feel like you want to find somebody better if this style doesn't work for you. And the rest is up to you. And like it says, your results will be an accurate reflection of the amount of work you put into learning how to be and remain a consistently profitable trader. And also, like Jay from Eat, Sleep, and Profit told me, he said the secret to trading is that there is no secret. I asked him, I said, is any tips that you can give a new trader? He got Jay from Eat, Sleep, and Profit. He's a YouTuber. He's got a lot of free information on YouTube. You can check him out. But that's what he told me, basically. The secret to trading is that there is no secret. You get out what you put in. So everybody, that's common knowledge. So without further ado, let's get straight into the meat of this presentation and start to build our understanding of trading and all that it entails, putting us in the best possible position to be consistently profitable as traders. So, what is trading? Trading is the action of engaging in trade. In our situation, we are engaged in the buying and selling of stocks. Types of trading. There are 2 types of trading that we will be focusing on in this particular strategy. That's day trading and swing trading. Day trading is the buying and selling of a stock within the hours of any given day of trading. When day trading, you can buy a stock and hold it for a couple of minutes to maybe a couple of hours, but your plan is not to hold the stock overnight. Swing trading is when you buy a stock and you may hold it for a few days or even a few weeks if the stock continues to prove profitable for you. So what are the pros and cons of these types of trading? Well, for day trading, some of the benefits are as follows. It allows you to use your capital in the most efficient way possible when compared to other types of trading. Because day trading in and of itself is the buying and selling of a stock within the hours of one market day, you avoid the possibility of experiencing an unexpected loss due to like a gap down pre-post market, or if you're long a stock on a gap up, short a stock overnight. Now this is very beneficial because day trading in and of itself is the buying and selling of a stock within the hours of one market day. You avoid the possibility of experiencing an unexpected loss due to a gap down pre or post market if you're long a stock. So, what are the pros and cons of these types of trading? For day trading, some of the benefits are as follows. It allows you to use your capital in the most efficient way possible when compared to the other types of trading. Because day trading in and of itself is the buying and selling of a stock within the hours of one market day, you avoid the possibility of experiencing loss due to a gap down pre or post market if you're long a stock, or a gap up if you're short a stock overnight. This is very beneficial because it affords you with the peace of mind knowing that in the event of an unwanted move in the stock, you are in all cash. This gives you the ability to start every day fresh and clear, ready to tackle a new opportunity that presents itself. On the downside of trading, since you are gunning for those intraday moves, the potential reward is somewhat smaller when compared with the potential reward of the longer term expected move of a stock over a number of days. Because with that being said, that's like when you're trading intraday, your position size is increased to capitalize off of the smaller term movements. You see, to see a considerable gain intraday, your position size has to be increased. This increase in position size is no doubt accompanied by increased risk, as you are now exposed to more possible stop outs that come with the intraday fluctuations in price. You see, when you're using that daily chart, you got that still picture. But when you're intraday, you know, those candles are moving and flying around, you know. But when you use that daily chart for your swing trading, you got that still picture. You see, and then when it violates your picture, you get out. And it's the same thing intraday, but it just happens faster. You see? So we're going to get into some examples. Check it out. So, swing trading pros and cons. As noted before, in the pros and cons of day trading, swing trading has its benefits. You can place your trade with a small amount of capital because you're focused on the longer term gain that can be had by holding 3 days to a week or two, depending on the setup. For example, check this out. Now, this is W right here. Ooh-wee! This thing is looking sweet. Anyway, now this was around the time. This was around the time I first started looking at the charts, actually, and it was a buddy of mine that was trading that trades with me that we started trading together around this time. The same time. Now we didn't know what was going on, but looking back at it now, and at the end of this presentation, you'll be able to do the same thing. Like as a new trader, you may look at this image and say, "Well, you know, what is all of this stuff?" Right? But at the end of this presentation, you're going to be able to know exactly what this is, exactly how to hit it, exactly where to get in, exactly where to get out, right? So check it out, and you could just check it out right here. So this is a bull flag pattern, and this is the daily chart, right? So as this thing broke out here, imagine if you bought it here, you know, when the price was about $100, and you know, you held the stock as long as it didn't violate your moving average. You see what I'm saying? And then as soon as it violates your moving average, you get out. You have to sell it. That's the rule, and you have to follow the rule. And your stop loss is here. So this would be considered a swing trade. And this thing went from about $90 to where you would have stopped out about $115. $115, about $25, right? So with $100, you know, $8,000 investment, that's $2,500 on top of that. Or you could multiply the math: 100 shares, 200 shares, 300 shares. But it doesn't matter. That's the trade. You see? But that would be considered a swing trade. But a day trade, you capitalizing off of, you know, the dollar intraday. Now you can take that trade intraday in this day, in this day, in this day, but it might not go straight up, you know, as soon as you want it to intraday. It might not go. But we're gonna learn about all of this stuff. But this is a swing trade, right? Well, let's go ahead. So now you can place your trade. Now this is beneficial because unlike day trading, with swing trading, you don't have to sit and watch every tick of the chart. Like I said, it's a still picture, just like what we saw. You simply analyze your trade, place the trade, sit back and wait for it to develop. Speaking of sitting back and waiting, since this type of trade gives you so much time to analyze your move, you have the opportunity to ensure yourself that you've done everything possible to make sure things are covered on your end. Meaning, you can take the time to make sure all your criteria are hit. You see, unlike day trading, you have to make sure your criteria are hit within seconds. Is it above my moving average? Is it respecting support? Is it breaking you know, resistance? You know, following price action, right? So now there are some cons also associated with swing trading. You know, if you come to understand that you really enjoy trading, you know, swing trading can be boring because, you know, you're not getting no action on in the daytime, you know, with the charts flying around, you know. But you'll see as you get into it. Another thing, it's a less efficient use of capital. With that being said, because there are opportunity costs, and you may want to buy another stock that you think is going to do a big move, you know, but you're already in this position and you're already in two other positions. All your capital is tied up. You see? So that's like only three positions you're in, but now your capital is tied up. But if you can juggle that many swing trades, if you want, then it's not a less efficient use of capital for you. But for small account people, it is. Now that we have a basic understanding of the types of trading we will be undertaking, the next step here is for us to become familiar with the charting and technical analysis, as this will be the basis upon which we will make the majority of our buy and sell decisions. All right? Technical analysis and chart setup. So first, before we set up the charts, let's just have a brief understanding of what charting and technical analysis is. So what is charting? Charting is the graphical representation of the past history of transactions between sellers and buyers over a given period of time, whether that be monthly, weekly, daily, or all the way down to a minute-by-minute basis. Now, what is technical analysis? Technical analysis is the method the investor uses to analyze a chart and thereby make decisions on whether to buy or sell a stock based upon the current price in relation to the price history of the chart. So, in your trading journey, you will come across a term called fundamental analysis. Fundamental analysis is the method by which investors use fundamental health of the company to make buy and sell decisions. For example, the investor may look into the company to see if it's in debt, or if the company has good earnings, if the company is making a new deal, if it's a biotech company and they just came out with a new drug, or if it's in like a phase 3 approval or something like that. These news, you can even build a strategy categorizing stocks that move in relation to news categories. You see what I'm saying? So now this type of analysis is good, and there are people that use this style to make money. Now, this is not the method that I've chosen to pursue here, which is why further coverage of the topic is not going to be well in here, but it's important to know about, so you won't ask, well, what is this? Or, you're not giving us the whole scoop. But like I said, everybody has this style, and you're not only going to learn something from here, but you'll also be learning from anyone else who has to share, as long as you're seeking information. Okay? So, briefly, here are some charting platforms that you can use. I recommend TC2000. That's what I'll be doing the tutorial on, and that's what I use. That's the chart you just saw. That's the platform you just saw. It's the best one in my opinion. I use TradingView. TradingView is free. You can go to tradingview.com, and I use TradingView a lot for looking at cryptocurrency charts, but not stock charts. You can also use freestockcharts.com, but if you're gonna have something stable, I just recommend just go ahead and download TC2000, so you won't have to have the stress of that web-based platform. Thinkorswim is cool. It's just Thinkorswim is free, and you can get free real-time charts. The thing is, they're just not that pleasing to the eye, but if that doesn't matter to you, it doesn't matter. MedVed is pretty cool. Like I said before, I should have said this in the beginning of this presentation. The majority of my style is learned from Bulls on Wall Street. I learned how the strategies that they use to make money in the stock market. So I adapted those strategies, and I actually kind of made them my own, because that's exactly what you have to do as a trader. You're going to have to get a style, find somebody that you like and trust, and learn their style. And then you're going to have to see what parts of it work for you, see what parts of it don't, and then make it work for you, if that's what you can do. Bulls on Wall Street is not the first trading educator I went to. I went to another trading educator before. I went to Tim Sykes, and I was like, man, I can't understand it like this way, so then I went to Bulls on Wall Street, but that's a whole nother story. Well, I just wanted to give them a shout out there, because that's just what you got to do. Boom. So here it is. Download that TC2000. Go ahead. Pause the video. When you got your TC2000 downloaded, open the video back up, and then I'll be right here. We're going to get straight into the chart setup, and then we're going to cover some more information about what we set up on the charts, and then that'll be the end of this session. All right, so here we are. If you just downloaded your system and it looks like this, we're gonna go ahead and set it up. We're gonna go ahead and get set up straight up from the ground up for success. All right. So boom, just follow my instructions. We're gonna X that out. Now, over time, you'll be able to, yeah, forget it. Let's just go ahead and do this. Boom, hit the X, delete, hit that X right here, delete. Go ahead and pinch this over a little bit here. See this volume right here? Go ahead and hit that, delete. All right. Now, I want you to go ahead, right click the screen, hit edit chart properties, go to price style, plot style, candlestick. Bam. There it is. And color based on open versus close. And come down here to fill based on up bars. You see that where it says where it's not filled? I don't know why they do that like that. Bam. Hit fill. Fill it. And let's see if there's anything else we have to do. Also with this, let's go ahead and go to scaling. No, not scaling. Coloring grid. Now, coloring grid, you can you know, change the color of your chart, you know, and you know, you can make it look all cool and stuff. Like and let's go ahead and take off these lines right here because we want to limit, you know, the amount of confusion we have. At some point, you might want to put them back on, but just for the sake of delivering this style, let's go ahead and take them down. But at some point, you might want to use them for your own levels as you develop your style. So let's just put those value and date lines down, and let me just go ahead and give my agenda a nice, yeah, I like that color. All right, now these moving averages here. Let's go ahead and edit this one, change it to 50. I like my 50 moving average to be yellow. We got a 200 moving average here already. Go ahead and edit that and make that, well, I like mine to be purple. You can make yours whatever color. Now, go ahead and hit this plus sign right here, or you can just right click the chart. You can right click the chart and hit add plot right at the top and type in moving average, and you see exponential, click that one. And then click Disney, the Walt Disney, whatever the name of the company is. Right? Then we're going to edit that and make that a 9. And I like mine to be green. I like my nine EMAs to be green. Yeah, sometimes white is alright, but I like them green now. Then we're going to hit the plus sign again. And then we're going to type in moving. We're going to add one more moving average, but this one's going to be simple. Moving average simple, add it to the company name. And this is going to be, we're going to edit it. We're going to make this our 20 moving average. And I like my 20 moving average to be red. All right. So let's all go on the same stop. Just so we can make sure that our lines are matching up. So because one time when I first started, when I added my moving averages, I messed up and added them to each other. So they were all looking the same. I'm like, you know, this doesn't make any sense. Until I realized that you have to add it to price history. Don't add it to another moving average, because it's going to be the moving average of another moving average. So we want to hit the plus sign again. Then we want to add volume, V-O-L-U-M. It should pop up the first one. Bam. And we want to pinch that thing down. Want to pinch that thing down, just like that. At the size of it, pinch it down. Then, want to hit that plus sign one more time. Bam. Then we want to add stochastics, S-T-O-C. Oh, pinch that puppy down. Go ahead and pinch that puppy down right there. Then, one last thing, Bollinger Bands. Hit the plus sign. Boom. You want to hit the Bollinger Bands with a little circle right here. Add that to price history. Man. So now we set. These are all of our indicators. So now, one more thing I want you to do. This is really quickly if you're following along on TC2000. I want you to go ahead and hit watch list, hit new, matter of fact, yeah, hit new personal watch list, make a list, call it anything you want, whatever. My first list. Right? Then, I want you to come here to the little drop down tab, hit new tab. Then hit watch list, hit S&P 500 right there, S&P 500, SP 500, boom. Right click that, click copy all symbols to my first list. Then add a new tab, right there with the little sheet, hit watch list, hit US stocks. Right click anywhere in that watch list and click down here, copy all symbols to my first list. Then you can delete that. And you can delete that. Hit the drop down tab, new tab, hit watch list. Then come up here to personal, then hit my list. So now you can have those two combined. Then you can X out this placed watch list here. So now these are all of the stocks. These are not the majority of the these are more than 50% of the stocks in the stock market. This will be the majority of what you'll be flipping through, and then we'll narrow it down from the amount of volume at the end of this session. If you're still here, if you want to do it, we're gonna narrow down the crap ones, basically like the ones with zero volume, and narrow down our watch list for us to scan through. All right, so let's just go ahead and type back to AMD. We could just leave this over here for now. So let's go ahead and explain what all of these things are on the chart. So remember these Bollinger Bands. You got your moving averages, these squiggly lines right here. We got volume and stochastics. So what are these? What are these? So the first thing that we were talking about was price, right? We were talking about price. There's price action here. This is price. These candlesticks here. These are candles. These are what's going to be called candlesticks. Remember when we changed them in the beginning to candle? These are your candlesticks. All right? Excuse me. So, you see we have green candlesticks and red candlesticks. Basically, when the green candlesticks open, meaning say it's 9:30 a.m. and the stock market bell is ringing, ding, 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 when that first candle opens, when that first second hits, if price is at $25, this is the opening price, $25, then it'll go up, right? Price goes up. When a green candlestick represents price going up. So let's pretend that this candlestick represents one day, one movement of one recorded day of price from 9:30 to 4 p.m. So 9:30, this thing price went up. It could have went all the way here. It could have went all the way up here. Price could have went all the way back down here, and then went all the way here by 4 p.m. And then price would have closed higher still at the end of the day from where it opened before. You see? But that'd be some pretty ugly action intraday. But let's see. You have a bearish candlestick. The red candlesticks are basically the opposite. When price opens, they go down. So basically, let's pretend this daily candlestick here, when it actually did go down, if you thought that it turned red when it went down, then you're correct. This candle would have turned red when it went down. So like you'll see when you look at the charts moving intraday, you'll see them flickering. It'll be green, green, go up, it'll go down, it'll be red, red, but wherever it closes is where it closes. So you can clearly see that. Let's see, these are pure good examples here. Price open here, went up. 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 You see? Price open here, probably went up, went down, closed right here. Still closed lower than where it opened. See? Price gap down, went here, price went up. Price open here, went down. Price open here, went up. Next day, stock gapped up. Price open here, went up. Woo! Remember that day? It was crazy. Man, look at that thing. Price open here, went down. Price open here, went down. Price open here, went up. Open here, went up. Price open here, went up. Price open here, went up. Gap down. Oh wait, no, gap up. Came outside the Bollinger Bands. Price open here, went down. See this thing. So this thing was pretty crazy around that stage there, but we're gonna get into this stuff. Woo-wee. So those are your candlesticks. That's price. Right? So don't worry. Let's just get through this. Let's get through this stuff. All right? So, a few things to cover. Price. The first and foremost important thing in any chart is price. This is where we will identify our patterns. By patterns, I mean literal patterns. Okay? Volume. Now, remember volume. Based on the volume bars on the stocks chart, listen to this. See, this is volume. Remember that? These bars here. Now, these correspond. This is just a reflection of what's going on inside the day. This is a reflection of the amount of shares traded during this particular day here. This is your daily chart. As you can see, we got the D symbol up here. This is a reflection of what's going on. I mean, the amount of shares that's traded in the day. So this volume gives us a picture of the amount of interest in a particular area of a stock's chart. So for example, we can see it was a particular amount of interest around these areas here. As we can see, an increase in volume as opposed to lower volume during these days when price wasn't as high. or when it wasn't coming out of any kind of pattern or something. You see? So volume. Based upon volume bars on the stock's chart, we can learn some key information about the state of the stock. We can gain insight into the short-term future of the stock, as well as identify the phase of the stock, which we will be covering in the next class. Also, when looking at the volume of the stock, we are able to see if the stock is liquid, meaning will it be easy to get in and out of the stock? Because there are many shares traded at your stop out level. Sometimes there may not be shares traded at a level that you're looking that you want to sell, because there's just no volume, So a good rule of thumb to live by when planning to day trade or swing trade stocks is to choose stocks with a minimum average daily volume of no less than 500,000 shares. And I even say that sparingly. I even want to narrow it down to 1 million shares. Now, stocks with an average, pretty much. 1 million shares traded on the day as I did. Now, float. Wait, just before we go to float, you can get a quick reading of this volume. How do I know, if it's a lot of volume? Well, you can see this scale right here. For example, this is a highly liquid stock, AMD. This stock trades on average right now 127 million shares per day, as opposed to some other stock like this with no volume. Let's see, what's this? Look at this, PER, 0, average daily volume 0. You might be saying, oh man, this is a good, I might can do something with this. I might can do something with this. And look, yeah, you might have got something right here, right? Say you got in right here, thinking it's going to go higher, and then volume just dies out. Now you can't even sell it. You're the last one holding it, But, I mean, for this person, they're kind of lucky because it's been going sideways, but it ain't been going up. If they didn't already get out, been holding it for a daggone a year, Look at this thing. No volume. Look at this thing, even going higher with no volume. You can't even trade this. Things get shut down. So these are all the stuff we're going to delete. Because you can't, there's no life in them. No life in them, no volume, no life. You want that liquidity. You want that liquidity at your entry levels and your stop out levels. You don't want to have to be waiting and guessing and wait for your order to get filled by somebody, some Joe Schmo coming by. All right. Let's go back to AMD. Now, float. So when preparing your watch list, you also want to populate your I think this should be saved for the later risk when we do like the risk management part of it. But this is basically this float. When preparing your watch list, you want to populate the watch list with stocks that have a float of 100 million shares outstanding or less. This is because lower float stocks have the ability to make bigger moves in either direction. Not to say that higher float stocks don't have the ability to make bigger moves, but low flow stocks do have the ability to make bigger moves quicker, I think. Because now you got higher flow stocks that are big names like, Apple and stuff like that, and Google and Amazon and stuff. But those stocks obviously can make big moves. Like my own trading educator said, we're in a day now where, algorithms are with trade in intraday, algorithms are moving stocks. So, algorithms are pushing stocks and making higher flow stocks move like low flow stocks. You see, so these are the times. So, but it's something to keep in mind. Float, right? So this is because lower flow stocks have the ability to make bigger moves, and higher flow stocks. These are theories now. Typically, don't make bigger moves. You see, for example, like GE or CIG, We can type in their tickers here, CIG. Look at this thing. You see, over the course of, you know, even in its uptrend, look at this high-low range. This high-low range on the day is only $2. So intraday, you could imagine that thing is 15 cents, CIG. And that is because the float is so high. Now, would it float? How do I know the float? How do I know where to find the float, right? So let's go ahead. You can go right to yahoofinance.com, your best friend. Then you can type in the ticker, CIG in this case. Then you go right here to statistics. Bam. And you see the float is 1.13 billion. Now, in shares, that's a lot. That's a huge float, because that means that that's a huge supply. If there's a huge supply of something, then that deteriorates almost the value of it, right? If it's so many of it, then it's not going to be special, right? Or in this case, in trading, if it's so many shares, then a bulk of shares can be bought up very easily, you know, as opposed to you know, shares with like, you know, 1.3 billion shares of. I mean, it's all relative too with this, right? 1.3 billion at $3. I mean, you could do the math and see how much it'll cost, but you know, who's buying that much shares? You know, and then you end up moving it on yourself. But so that's float. Now that's CIG, and that's how you find the float. Let's look at GE. It's another huge float stock that's commonly referred to as one of the high flow stocks. Now there's other high flow stocks. Let's see, float here, 8.69 billion. So that's even more than CIG. I mean, so you can do the relations and see, like, look, GE. Now GE has been a little bit more volatile lately, but I mean, it's, as we can see, it's been in a big downtrend. But still, intraday, it's not making any big crazy moves. You know, look at the range of these candles here, from here to here, 26 cents. You know, on a big day, you know, if you know, out of nowhere is $1.14. That's his best day. On one of these high volume gap up 91 cents. As opposed to other stocks that move quicker, like TLRY. Now this is let's see the float on TLRY and just compare it real quick. TLRY, it's a weed stock. Float 10 million shares. So that's 10 million special shares, as opposed to 8.6 billion regular old shares that everybody and their grandma have. Yeah, I got some shit. I mean, because everybody do have it. I don't got none though. But still. So, but look at this. 10 million, right? So look at the chart. So compare this to the other ranges. Look at this thing. Man, these are some wild times back in 2017. I mean 2018. Look at this thing. It's just experiencing this as a new trader. You don't know hardly, you trying to understand what's going on. Oh man. So this is a low flow stock, TLRY, and look at this thing. This thing went from lows of $22 to almost a high of $300 in a month and a half. In a month and a half. Imagine that swing trade. Imagine that swing trade. Imagine if even if when it broke the line in a line in the sand. $100 per share in a month and a half. even in the days and weeks. Look at this thing making that's just pure gains. Intraday, one day, $20. You see? When it's up there though, when it starts moving, you catch it. But the thing is, you're gonna have to get used to all of these. See, the chart doesn't look like this at first. This is just the final picture. You're gonna have to get used to seeing it like this, because that's how it'll look at first. So you're not gonna know where it's gonna go. It's gonna look like that. It's gonna look like that. It's gonna look like that, unless you can try to force yourself to see the big picture and be like, well, let me scrunch this down and see if this thing could possibly develop into something huge. That's what I've been doing lately. Let me scrunch this thing down and see if it could possibly develop into something huge if I look at it, you know, the bigger picture, you know, what's possible. Are the moving averages really loose or are they tight? You see? So that's how you want to play around with the charts. But look at that. This was it. And even on this day here, 32 to almost 38 bucks in one day. To catch a move like that is what we strive to do. Right? Hope it didn't mess up my chart. So boom. And look what happens. This is what it'll be like intraday, but the candles will be moving around. Boom. Boom. You never know when it's going to end. You think you found the top. Boom. Then it looks like that, and you be like, oh man, why didn't I get it? And then you got the people right here that want to get it, but then it never works. Never works, and here we are. So that's low float. What's another low float? Let's see, NEO. NEO's a low float. Look at this thing. So you get the point really fast. Like, you know, low float can make big moves to the upside, but they can also make big moves to the downside if you're using it. Now this is good for day trading. Now float probably doesn't matter as much if you're swing trading, because you can always, you know, finagle it around. But it's good to understand. Like I just even watched a Tim Sykes video, you know, about float and stuff, because I'm constantly learning. And if you're undertaking this task, then you know you should be too. So, you know, like what he said is, it's good to know about float because this directly deals with supply and demand. You know, this is all the stock market is supply and demand. You know, so let's go ahead and continue on. So that's float. Everybody knows about this picture, right? So you got your that's you right there, new trader, and you know, it's safe to be with the higher float stocks because you know they're supposedly don't move as fast as low float stocks, but you know you want that low float stock because they can give you that good gain. You know what I'm saying? But anyway, so basically, what I want you to take away from this is this: the float is basically just supply. So if supply is low, that equals the float is low. If float is low, that equals supply is low. If demand is high in low float stock, that equals the price will move at higher at a rapid pace. If demand is high in a low float stock, price will move higher at a rapid pace. If demand is low in a low float stock, price will move lower at a rapid pace. So keep this in mind. When you're consistent on a hot streak, you know, you may want to look for low flow stocks. I look for low flow stocks all the time. You know, you may want to look for low flow stocks to capitalize off of the opportunities. But if you're in a trading slump, you may want to trade higher float stocks as they are not as volatile, right? So now another indicator, stochastics. So what is stochastics? Uh-oh. One sec. Oh, man, come on. Don't do me like that, man. Come on, dude. Don't do me like that, man. Okay. All right, so stochastics, right? Back to AMD real quick. So these blue lines, these teal lines here, turquoise, these are stochastics. Now, the purpose of the stochastics basically the purpose of the stochastics basically measure, they tell when a stock is reaching extreme levels. You see what I'm saying? So like, for example, let's take a look here at this chart. And we'll look at all of the times, you know, just from the past 6 or 7 months, all of the times that the stocks have violated this this line that shows us that the stock is trading in extreme levels. A reversal is due very soon. So let's look right here, around a little bit before August this year. Stock breaches the upper Bollinger Band. Then it doesn't go high. It pulls back in, trade back into the inner range of the Bollinger Bands. Boom, stock pops out the Bollinger Bands right here, pushes up. Now this is extreme. Now this is extreme because people want to be here, right? Like I would want to be in this one, definitely. Stock pops up out the Bollinger Bands. So, but you know, this telling you, look, it's warning you, like, hey man, this thing is not gonna last forever. Keep your eye on this puppy. Keep your eye on it. Boom. Slams down intraday. Next day, doesn't make any gains. Comes back into the Bollinger Bands. Finally makes some gains. Trades back inside the Bollinger Bands. Boom. Gets another spike as it bounces off of the non-exponential moving average right here. Boom. Pierces the upper Bollinger Band again. Boom. Next day, gaps up. You're in extreme territory though, man. You got to come back inside those Bollinger Bands. Boom. Let's go. All right, trade. You going up. Boom. Nice and strong. Not pierce the Bollinger Bands. Boom. Nice and strong. Not pierce the Bollinger Bands. Boom. Next day, open up. Pierce the Bollinger Bands. Bam. Got slammed back down intraday. Boom. Closed. Back inside the range of the Bollinger Bands. You see? And the same thing happened to the downside. Boom. Starts coming down. Pierce the lower Bollinger Band. That thing's at extreme levels, baby. Keep your eye on that puppy. It's ready to make a move back to the upside. Boom. Stock goes up. Back up. Pierce that Bollinger Band. You see? These are extreme levels now. Look at these cases right here. You know, and the thing is, you don't have to worry about these kind of things because the thing is, if you're looking for like a day trade, you're not going to be looking for these kind of little days right here. You're looking for big days, big moves, and what we're going to learn. But this is just something to keep in mind as we're trading, you know, as we're looking for day trades or potential swing trades, just to look at the health of the stock, see what's going on. Right, so we covered our Bollinger Bands. Oh, man, my bad. We were supposed to cover the stochastics. But at least now you know Bollinger Bands, and now you have a semi-decent understanding of volume. Like I said, just going back over volume, the volume bars just correspond with the your candles here. So even on an intraday chart, let's look at it like a 15-minute chart where every candle will represent 15 minutes. You have a 1-minute chart where every candle will represent 1 minute. You have a volume bar that'll correspond for every 1-minute candle. You see, and it'll also give you a picture of, you know, like I said, the interest in certain areas. If there's increased sell volume, you can see that, you know, this thing is going down. There's increased sell volume. You can start to see a volume shift when volume starts to increase, when you see green candles start to increase. You see, like, look, for example, here, you see green candles start to increase in an area that looks like it's due for a potential move to the upside. And then you see a sudden shift in that, but you see a discontinuation of that volume here, and then a sudden shift in price. You see, so that's something to keep in mind. So just get acquainted. You have to get acquainted with these things, and over the time, you know, you're gonna have to get familiar with it. But that's enough. But you'll see how it responds to the day. You can look at breakout spots and say, all right, you know, I got a breakout here at this level, and I got a huge spike in volume. Like you know, you can say like right here, like I got a huge spike in volume, or here on this day, I got a huge spike in volume. You know, this thing might go higher. So this is what we refer to as high relative volume. So you use high relative volume because it's high relative compared to volume on its other days, right? Let's go back to that daily chart real quick. And you can see it's a huge increase in volume in this whole area here, because everybody wants to try to get in and make money to the upside or make money to the downside, whichever way, right? So now we're going to cover stochastics. Now these are stochastics right here. Now stochastics tell us when the stock is oversold or overbought. Now we want to go ahead and just edit these things real quick. If you still have your charts open here, let's go ahead to edit and then change them to period 5, and then you can leave that 3, and then edit the D, make that a 3. 533, that gives us our smoothness, and it measures the average of the 5-day period, right? So as we can see here, this stock is extremely oversold. Now this gives us clues. This thing basically tells us that, hey, buddy, this stock is oversold. So it may be due for a move in the other direction very, very soon. It's extremely oversold. In fact, it's a 9 on the stochastics. So let's look at the last time, you know, this thing told us something like that. You know, let's look right here. So right here, when it was low, when it was below 20 on the stochastics, our line in the sand, when it was below 20 on stochastics, hey buddy, this stock is oversold. We might want to look for a direction in the other move, or we can use this as clues to say we might want to capitalize off a direction in the other move. I mean, off a move in the other direction. So look, and then as we can see, this thing starts to go. So we can see price here responds to this thing right here. So we can look for a move in the other direction. You know, we can look for a move in the other direction here, according to this, if it doesn't break this line and continue lower. Now, just because it's oversold doesn't mean it can't go lower. You know, and vice versa for it being overbought. Look at this thing right here. It's overbought. When it was overbought right here, right around this area, where it still gapped up a little bit, it was overbought on this day, on these days. And it still went up a little bit. I mean, there's not anything real significant, but then it came down. I mean, it's significant for you know, it's all relative. But this thing came down. You see, it reversed in the other direction. And I just want you to understand the function of the stochastics in relation to price. You see, so how we can use these clues. That's all we use these indicators for, are clues to help us build our case, you know, about what we think the stock is going to do. You see what I'm saying? Now, there's a million indicators out there. You hit this plus sign right there. All of these indicators. Oh, man, get it out of here. Now, you can fiddle around with them if you want, but, you know, just you know, you'll learn. But that's not what this strategy here is directed on. So let's just continue on. So those are stochastics. Those are the stochastics right there. So right now, so you can, and you, once you do your research, go back into the charts and look at every time the stochastics was over sold. See if you've seen a bounce. Look at this oversold area, seeing if you've seen a little bounce. Look down at the stochastics, look up back at the price. You know what I'm saying? Look here, oversold. Boom, little bounce. Boom, overbought, oversold. You see, so, and like I said, when it's oversold, even if price is still going up, it'll stay oversold. Now, even if it's oversold, if it goes sideways, it doesn't have to go down. The price doesn't have to go down for stochastics to go down to oversold. Price can just be going sideways and the stochastics will make its turn. You see, so. But just keep in mind the extreme levels. When it gets to below a 20 on the stochastics, start looking for a reversal in the other way. And if it gets above 80 on stochastics, you want to start looking for a reversal to the downside. So by now we should have a good understanding of stochastics, the volume, and the Bollinger Bands, and price, right? This price action, candlesticks, how they move, how they open and close, price, and how we look for price patterns, like for example these flags. You got a pole, then you got a flag. You got a pole, and you got a flag. But we're going to learn some more about it, so have no fear. Let's just continue through the information. Now, what do we have next? The moving averages. Boom. Now, these are your moving averages. Now, we labeled them, edited them earlier on. We made the 9 exponential moving average, the 20 exponential moving average, the 50 exponential moving average, and the 200 exponential moving average. Now, the 9 and the 20 exponential moving average, the purpose of these moving averages are to measure the short-term direction of price, the shortest term direction of price. You see, and in this strategy here, we also use these 9 and 20 exponential moving averages as means of exit strategy. Now, but that's something we'll cover later in the presentation. Now, your 50 moving average, the purpose of the 50 moving average, this is your intermediate moving average. This is like your line in the sand, your 50-50. So when stocks are above your 50 moving average, they tend to display more bullish patterns. And you're going to learn terms like, bullish, bearish. Bullish, this means that you like the stock to go up. You're bullish on the stock. I think it's going to go up. And you'll see terms like bearish. I'm bearish on the stock. I think it's going to go down. I'm bearish on the whole stock market right now. I'm bearish on AMD right now. I want to put a short on. I want to put a short option put on this thing. Something like that. Right. So that's your 50 moving average. And then when it's below your line in the sand, it tends to display more bearish patterns. You see, patterns that suggest that the stock is going to make a move to the downside. Then we got the 200 moving average. Now this is like this is more your strong, solid moving average. It's a tough nut to crack, but when it finally cracks it, like for sure, then you can suggest that momentum has really shifted. You see, so I mean, in this time now we're going to learn about trends and support and resistance, and we're going to learn about trendless times. Now this will be a trendless time when stock is not going up or down, just sideways. And during this time, the moving averages have no effect on price because it has no average. They're just going to go sideways. Only when there's an interest in the stock or the stock is breaking some sort of resistance or technical level, that's when you can expect to see the moving averages responding and start doing the things that you were taught that they were supposed to do. So these are your moving averages. So, yeah, go ahead and you might have to rewind this video, watch it again, watch it again, watch it again, watch it again until you understand, until it makes sense to you. You see? Because that's what you have to do. It's a skill. This is a skill that you have to learn. So now we learned all the components, our moving averages, the purpose of our 9 exponential moving average, our 20 exponential moving average, our 50 exponential moving average, and our 50 simple moving average and our 20 moving average. You can call them SMAs, simple moving averages, MAs. You'll hear it as you progress in your own studies. Now, so we covered basically the moving average. You can screenshot this and save it in your notes if you want to study sometime or something like that. You can screenshot everything in here. Man, that's it. So I have a little homework thing. You know, this is for you, man. I mean, I want to help. I want to help people, and I'm inviting people to join along and help me because I need help. You know what I'm saying? I got a lot of strategies I want to test out. And I could use the eyes, the hands, the help, and the company of many smart people out there that I know out there. So basically, so we did chart setup. We added our indicators. We understand the purpose of our moving averages, our 9, our 20, our 50, our 200. We understand stochastics, how they show us the oversold and overbought. We understand volume. We understand Bollinger Bands. And like I say, do further research about all of these things because I'm going to continue to increase my research about all of these things. So the presentation 5 years from now will be, on another level. You see? So anyway, set up your stock list. We did that. Get familiar with your platform, zoom in and out, grabbing your tools and stuff. One sec. Sorry about that. Like I said, get familiar with your platform, zooming in and out, grabbing the tools, you want to get familiar with looking at this stuff, moving around. You want to get comfortable with it, and you will, over time, play with it. You can add your times in here that you want your time frames. So these are the time frames that I particularly have, and that I suggest that you have in your. I got the 1 minute that I like to look at, the 2 minute. I particularly trade on the 1 minute a lot intraday, but for the bulk of the beginning of this presentation, we're just going to focus on the daily chart because as a swing trader, that's what you'll be focusing on, the daily chart. You'll be focusing on moves over a couple of days to sometimes even a week or two, or sometimes even a month or two. I've held crypto for over 2 months, and that's why I'm here today. Now, but it's developed into something more. But anyway, add that 3 minute, yeah, for sure. Add that 5 minute, add that 10 minute, that 15 minute, add that 30 minute, the hourly, add that 4 hour, the daily, the weekly, the monthly, and I even like to put the yearly on there. Man, and I really want to look at that quarterly too, but the world of trading and investing is just so vast. To try to do everything at once is just too much. So even this now is probably, I'm sure, is a lot to focus on, but you'll get more comfortable. At the end of this presentation, you'll be like, that's it? That's it? Well, then, that's all I got to do then. So boom, you got all of your time frames in there. And I want you to just go through the time frames, try to look like you may be looking at this candlestick. This candlestick represents 1 day, right? This candlestick represents 1 day. So you can look at this 4 hour. These candlesticks represent 4 hours. Just imagine there's 2 4-hour candles in here. Let's hear it. Is it 8 hours in a trading day? Anyway, look at this. It doesn't matter. Well, look, hourly. How many hours in a trading day? These candles represent the 1 hour. So just imagine all of these candles here inside the daily candle. Imagine, you go down to the 5 minute. And then you look at these 5 minutes from, oh, it won't let me use that. Let me see if I can use a trend line to do it. Yeah. From this day, from this day, the 21st until the close. This is the open right here. And the price just went down all day. So imagine all of these candles right here. This is the 5 minute candle. Each candle represents 5 minutes. Imagine all of these candles here are inside of this one daily candle. You see? All of these moves are inside. So you zoom out, you realize that, oh, this is 1 day, This is one day. Oh, this is a whole candle. This is a whole candle. This is a whole candle. And then you have to develop an understanding of how these candles can develop so that you keep your mind focused on the bigger picture. On the bigger picture, because you be thinking about something in here. Oh, this thing might go up. This thing might go up. Or I see a nice bull flag right here. This thing might go up, right? Oh, it's going higher. It's going higher. But you got to keep your mind focused on the bigger picture, which is this. And you right in front of this train. This thing is about to crash right on your head. You see what I'm saying? Because you got all this force on top of you, and it's been a big downtrend. It has been since October. Late September. Man, what a call. Man. Alright, so so we have our watch list, and one more thing, like I said, what we wanted to do was, if you're still here and you want to try to set up your watch list with me real quick, just go ahead and just make sure your little bar is right here at the top, and we're just going to do something real quick. We're going to get rid of all of these low volume stocks really quickly. So go ahead and let's see if this works. I'm holding shift. Wait, let me click it. So I click this, the very first one, and I'm holding shift now. Clicked it again, and then now I'm clicking the next one, click the next one, and I'm still holding shift. Okay, so that works. All right, watch. So this is what I want you to do, because I'm trying to delete a bulk of them at a lot. So hold shift, bam. Click the stock and still hold shift. Now, click the next stock and still hold shift. So while you're still holding shift, never let go of shift. So I'm moving my mouse around and I'm still holding shift. So now I'm going to scroll down here until I get some volume that I like. So the volume, probably the important step we skipped real quick. I'm still holding shift just because this volume, when you click it, it'll give you the highest volume first. If you click it again, it'll give you the lowest volume first. It'll give you the lowest volume at the very top. So you go ahead and get the lowest volume stock at the top, which is the one I got now that I'm holding while I'm holding shift. Now this is going to be a trick I'm showing you guys. And then you want to go ahead and scroll down. I'm still holding shift. Scroll down all the way till the volume reads about 1 million in here. We want stocks with liquidity, stocks it has some life, that's some with interest. You got to make it to the million club, man. So we're gonna go right here, all the way to here. So I'm still holding shift, and then I click this last stock. So that shaded everything. Now I let go of shift just now. So that shaded everything. Now I'm gonna right click all that I shaded. I'm going to right click all that I shaded, and I'm going to be like remove from list, all those symbols. And now we have 1,725 stocks left in the list. You can see that number right there at the bottom. So that's how many stocks we have. And, you know, like what I asked my own trading educator, I said, give me some advice, what I can do to increase, my skills. And he said, look at 1,000 charts a night. He said, look at 1,000 charts a night. Now, sometimes I can do it, sometimes I can't. But, but the times that I've done it, and, as I attempt, because this is a practice, it's a life skill. It's like anything else. You get better at it. You attempt to do it, and with your own self-discipline, but 1,000 charts a night. What I want you to try to do is go ahead and you can put the highest volume stocks at the top, and then start from there, on the daily chart, and then just start hit the down button or the space button, and you can start scrolling through the stocks. See? And I want you to scroll through and just look at the stocks, look at the different levels, just look at the stocks, scroll through, Get used to seeing them. Get used to looking at the big picture, the moves on the daily chart up and down. Ask yourself, questions like, where would I have bought this thing if I could have bought it on this day here? What was I doing on this day? August, look at your birthday. Go look at your birthday. February 15th. That's my birthday. Let's see, February 15th. What was this day? Oh, wow, look at that. What was I doing? Why didn't I buy Apple for my birthday? I want you to look at that kind of stuff. Like, just to get, it'll give you an exercise in the chart. Let's see. Boom. February 15th, gap up. Stock gapped up, probably went down a little bit, but stock went from 169 to 172. So it made a $3 move. If you can look here in the little corner, if you look in the little corner in the little box, it says 3.14. That shows the dollar amount that it went up, and then right next to it, it shows the percent amount. And if you look up above that, you see in red where it says volume, that shows the volume that it traded during that day. So that's 51 million shares. So that's pretty good. Man, I could have bought this thing. I could have held it. For real. But yeah, so look at that. I mean, just opportunities are endless. Literally. So go ahead and look at some charts. Scroll through the charts and then look at find your birthday. I want you to zoom in on the day of your birthday. Wow, that's a good idea. To get used to looking at the charts. Zoom in on your birthday. Bam. 215. I wouldn't even touch that thing with a 10-foot pole. Yeah. So, like I said, the key thing I want you to take away from this homework is the price movement in relation to their time frames. Get your eyes used to the up and down movement. Look at your charts and see how they respond to the indicators, and see if any of what I just said makes any kind of sense. And that's about it. So I thank you for watching. This is part 1. Part 2, we'll be going ahead and be covering market cycles, trends, support and resistance. And yeah, that's it. All right, thanks. Peace.